Hello everyone and welcome back to my YouTube channel. My name is Evelyn and today I'm going to talk to you about the tax-free savings account. It's February, it's the end of tax year in South Africa, and I have decided to dedicate this whole month to tax. So if you want to engage in that type of conversation, hit the subscribe button and put on your notifications so that you can know whenever I upload a video. So today I'm going to talk about the tax-free savings account. So let's get into it. The tax-free savings account was established by the National Treasury in 2015. I started using mine in 2016-17 tax year, and then since then I have been, it has become a permanent feature, or it's a standard feature actually, of my of my investment structure. The rules of the tax-free savings account are that you must contribute or save 33,000 and not more than that. You may save less or skip a year if you want, but the maximum per annum per person is 33,000 rand. And then over a lifetime, you are allowed to save 500,000. Now these limits can be adjusted by the National Treasury. We saw in 2016-17, I think, the limit was increased to 33,000 from 30,000 in the previous year. So we don't know what factors they consider, but chances are they may increase the limits as time goes on. And then if you look at the both limits, it will take you about 15 years to get to 500,000 of the lifetime limit. So that's how long it will take. The contributions to the tax-free savings account are not tax deductible. That means you can't, when you do your filing in July, you can't then say, I have contributed 33,000, please SARS give me a break on my tax liability. No, they are not tax deductible. Only your earnings are tax free. And then if you have more than one account, both are you if you have more than one account, those accounts must add up to 33,000. So you can't have 33,000 in different accounts. You are allowed to have different accounts, but all of them, the total must be 33,000 on the last day of February. Ne? And so how do you contribute into your tax-free savings account? Your contributions are entirely up to you. If you want to contribute a lump sum of 33,000 at the beginning or in the middle of the tax year or at the end in the last month of the tax year, you may do so. If you have a lump sum of 10,000, you may do that. But the objective is to get to 33,000 and less at the end of the tax year. So for example, I have divided the 33,000 into 12 months. So every month I'm contributing 2,750, so that by the end of the tax year I get to 33,000. So that's also allowed. There is no obligation to save 33,000. You may save 10, or you may save 50 rand if you want. So there's no obligation. You can do it as you like and as you can afford. Some institutions have a minimum of 500, but I'm not sure whether this minimum applies to when you open the account or if it's a monthly thing. Please, if you have that type of account, comment in the section below and tell us whether your minimum applies to every single time when you save, or it's only a minimum when you open the account. What is the best TFSA in South Africa? According to Intellidex, which is a research company, and Financial Mail, I think, the Easy Equities TFSA has been winning the top TFSA award for the last 5 years. So since it was established, they've been getting that award since it was established. And yeah, if that is our indicator, we can safely say, and these are not my words, we can safely say that the best or the top TFSA is the one that is offered by Easy Equities. However, it's entirely up to you. Easy Equities may not fit into your risk profile. It may not fit into your investment goals or your investment personality. So you may not find that it's the best for you. It was the award is something that is considered or is awarded after considering certain factors. So everyone is different. You can have a TFSA at your own bank if you like. So which taxes can you avoid in the TFSA? Firstly, tax on interest. Secondly, dividends withholding tax and capital gains tax. I'm not sure about the tax that is levied on interest, but dividends tax is 20% and capital gains, I think it's around 18%. So those are the taxes that you can definitely avoid. So what can you do in a TFSA? You can contribute your money or save your money and just let it sit there in the TFSA and earn interest, and the interest that you earn will be tax-free. But in terms of interest, you must remember that the first rent that is taxed on interest is after you have earned interest of 23,800. And if you want to do interesting things in your TFSA, you will buy exchange traded funds that are listed on the JSE and dividends. And because exchange traded funds behave like shares, they grow or they fall. But if they grow in value, your growth will be tax-free when you sell your exchange traded funds. So those are the things that you can do with your TFSA money. Your withdrawals, you can withdraw at any time from your TFSA. I never think about withdrawing because for me, this is a long-term thing which I shouldn't even think about touching. So yeah, that you can withdraw, but when you withdraw, you must remember that you cannot replace what you have withdrawn. The TFSA makes for easy goal settings. One, you have an amount set for you that for the year you have up to 33,000 to save. Two, you have a year, and in your lifetime you know that your minimum is 15 years minimum. You can extend it because maybe you didn't maximize your or you didn't contribute 33,000 every year. So that's an easy goal in that sense. And then it helps you with tax efficiency without even being a tax guru, because already you know if you put your money just to chill, you're going to save tax on interest. If you start using your money with buying ETFs, you know that you will save on other taxes, like I said, dividends, withholding tax and capital gains. And the best thing for me is that there is no obligation. Like, you open your account, you can use it when you want, you can contribute when you want. You don't have to be held to a contract that says every month you are going to debit your check account to send the money to a tax-free savings account. So you don't have to go through all of that. So that's why I like it. Guys, thank you very much for watching this video. And this is all that I wanted to share about the tax-free savings account. In the comments, please tell me if you have a tax-free savings account in your investment structure. Is this something that you aim to max out every year in terms of the annual limit? How are you using it? Do you use it on unit trusts or ETFs? And if you have one with a minimum requirement, is that minimum requirement something that you have to do per month? Otherwise, thank you so much. I'll be coming back with another tax related video next week. And thank you. Bye guys.